Monkey Viewer is filling up his tank. Same gas station as always. Same pump. Same Tuesday morning routine. But the number on the screen is not the same. $4.56 per gallon. The highest in 4 years. Monkey paid, Monkey said nothing. Monkey drove to work and ate a sad banana at his desk. That extra $1.50 per gallon didn't appear by magic. It has a name, an address, and a zip code. It comes from a narrow strip of water between Iran and Oman, just 33 kilometers wide, at its thinnest point, the Strait of Hormuz. The most expensive bottleneck on planet Earth. And right now, the monkeys in Washington and Tehran are deciding whether to reopen it or not. Today, Monkey explains what the US-Iran peace deal really means for your wallet, your economy, and the jungle at large. Spoiler, it's complicated. And the gas prices won't drop overnight no matter what the politicians tell you. Phase 1, the most important waterway you never think about. 20%. That's how much of the world's oil supply passes through the Strait of Hormuz every single day. 1 in every 5 barrels of oil on the planet squeezes through that narrow channel. When Iran effectively closed it in March 2026, the International Energy Agency called it the largest supply disruption in the history of the global oil market. Not of this decade, not of this century, in history. Brent crude shot past $120 per barrel overnight. Goldman Sachs warned prices could stay elevated through 2027. The S&P 500 dropped, inflation spiked, and Monkey Viewer started noticing his grocery bill looking suspiciously like a mortgage payment. This is what happens when a choke point chokes. Phase 2. The deal that might not be a deal. On May 28th, U.S. and Iranian negotiators reached a preliminary memorandum of understanding. Fancy monkey words, for we kind of agreed on something, but nothing is signed yet. Trump said he was close to approving a deal with major Iranian concessions. Iran denied some of the reported terms. Markets bounced up, then down, then sideways. Here is the brutal truth that financial monkeys in suits don't say on television. Even if a full peace deal is signed tomorrow morning, the Strait of Hormuz doesn't simply reopen like a supermarket after a bank holiday. Tankers need to be rerouted. Insurance companies need to recalculate risk. Shipping lanes need to be declared safe by independent bodies. Energy markets need weeks, possibly months, to rebalance. CNN experts confirmed it bluntly. Gas prices will be slow to recover even after the war ends. The pain doesn't stop when the fighting stops. Phase 3. What this means for the American monkey specifically. America has a problem that makes this worse than it looks on paper. The United States produces a lot of its own oil. So why does the Strait of Hormuz hurt American monkeys so directly? Because oil is a global commodity priced on a global market. When supply drops anywhere, prices rise everywhere. No exceptions. No diplomatic immunity for your wallet. Average pump prices in the U.S. are currently about $1.50 above pre-war levels. If the deal collapses and the strait stays closed, analysts projected prices could reach $150 to $200 per barrel. That's $4 or $5 per gallon at the pump. Possibly more. Inflation returns. The Federal Reserve gets uncomfortable. Interest rates stay high. Mortgages stay expensive. The economy slows. And Monkey Viewer's savings buy less every single month. What does the smart monkey do right now? First, don't trust the headlines. A peace deal announcement and an actual functioning peace are two very different bananas. Second, watch oil prices, not politicians. Markets price reality before politicians announce it. If Brent crude drops sustainably below $90, the deal is real. If it bounces around 100, uncertainty remains. Third, inflation isn't going away fast. Plan accordingly. Cash sitting still is still losing value. Assets that hedge inflation still make sense regardless of what happens in the strait. The jungle is watching 33 kilometers of water decide the price of everything. And Monkey Viewer is still paying $4.56 at the pump. Bye-bye.